Good evening. My name is Kurt Letkeman. I'm the chair of the board of directors for your credit union. I want to welcome you here tonight as we review the results of 2017, a year that was a good year for your credit union, a year that saw more change in the credit union landscape, both provincially and federally, and a year that is just continuing to see change come at a faster pace. Tonight we're going to recap some of the results from last year. We're going to hear about what is happening in the credit union industry, both provincially and with some federal numbers, and we're going to talk a bit about what's coming down the road. But before we get to that, we need to take care of some items in front of us. We're going to welcome some of the guests. I want to welcome Doug Enerson from our auditing firm, BDO Dunwoody. Doug is going to be retiring or moving on to another role after this. He's been here for many years. This will be his final years verifying our numbers, as well as Garth Mattis here from Credit Union Central of Manitoba. So thank you to both of you for attending this evening. I'd like to now call for a motion to appoint Carrie Wilson as the recording secretary for this meeting. Could I have a mover and a seconder, please? Mover, Hank Hildebrand. Seconder, David Bicker. All in favor? Opposed, if any? That is carried. Next, we have the approval of the agenda. Can I get a motion to approve the agenda that has been circulated? Mover and a seconder. Carrie, did you get that?
Ray and Cheryl.
Ray and Cheryl? Yeah. All in favor? Opposed? That is carried. Now we also need to certify the attendance and voting qualifications. In accordance with the bylaws, notice of meeting was given using various media a minimum of 14 days prior to this date. The bylaws state that quorum for members meeting the number of members, that is 5 more than the number of directors. Access has 11 directors plus 5. Quorum would be 15 members, and we can see that we have more than 15 members, and we're going to get the official number. We have 147 members present, so thank you for attending. Our attendance at this meeting is 147, which constitutes quorum. Next, I'd like to move a motion for the approval of the minutes of last year's annual general meeting. Can I get a mover and a seconder for that as well? Jim Newfold. Art Dick. All right, we have the technical requirements behind us. Now we're going to get on.
We have to vote all in favor of that.
Now we have to vote. Everybody can approve of that or not? Minutes of the meeting. All right, now we're going to get to the exciting part of the evening. We're going to hear about what is happening in the industry. We're going to hear about how the credit union did last year, and we're going to hear a bit about what's coming down the road in the future. So I'd like to welcome Garth Mattis, the President and CEO of Credit Union Central of Manitoba. Garth will share a little bit about the industry and what he sees coming. Garth.
Well, thank you, Mr. Chairman. I thought your and Larry's reports were the exciting part of the evening, but I'm pleased to be here. I thank you for the invitation to come and do look forward to the opportunity to talk to you about, I'm going to call it the environment that the credit unions are operating in today. By the very nature of this presentation, by the time I get through it, you're going to see that there's lots of things going on in this financial services industry. And credit unions have a lot of issues that they are looking to address. And therefore, I am going to be traveling through this at a fairly fast pace and at a high level. But I trust that by the end of this presentation, you will have a sense of understanding of what your credit union board, management staff are dealing with on a daily basis to be able to provide the type of service to you that you'd be looking for, and also to provide the good results that they're going to report to you this evening. I'm going to start with a comment that was made by a woman by the name of Barbara Stymius. Now, Barbara Stymius was an executive with the Royal Bank of Canada. She was actually Chief Executive Officer of the TSX Group Incorporated and Executive Vice President, Chief Financial Officer of BMO Nesbitt Burns, and a partner of Ernst & Young, so clearly a background in financial services and consulting. And this is what she said. She said, it's very difficult for people to get their heads around the scale of disruption that is coming. Businesses today require two lenses. The first to capture the short-term changes of new technologies, and the second to understand how these innovations are changing the long-term business model. This is the world that credit unions are operating in today, and credit unions are looking at addressing the short-term impacts of change and understanding what the impacts are going to be in the long term. So we are seeing change within the credit union landscape in Manitoba. Kurt just mentioned that previously. So we saw 3 more mergers in 2017, another 3 either proposed or completed in 2018. There is one that is still yet to be voted on. But assuming that vote passes, we will be down to 27 credit unions in Manitoba, plus the Case Financial Group. So if you want to take a look at the change that has occurred simply through mergers, as well as the growth in assets, what we can see is that we are migrating to fewer and larger credit unions. This is a migration that has been underway. This graph goes back to 2000. But we can see that we've gone from 65 credit unions down to 28 as of today over that period of time. And in the same period of time, we've seen assets grow in Manitoba from 5.9 billion to 28 billion. So the average size of credit unions over the last 18 years have gone from $90 million in assets to $1 billion in assets. Substantive change. You can see the rate of decline of that graph, which shows the speed by which we're reducing the number of credit unions. If we had graphed out the asset growth, it would actually be accelerating in exactly the opposite direction and actually at a faster pace. So lots of change. So what's driving this change for credit unions? Well, these are the items that credit unions are reacting to. Now, these are not new items, but what we're seeing is that they are coming at credit unions with greater intensity, particularly technology change, but I am going to add to that regulatory change. Those 2 drivers are causing the credit unions to determine an appropriate strategy to ensure that they continue to be competitive and provide competitive services. You know, the stakes are higher. Survival is a situation for some. That's why we are seeing so many of the smaller credit unions beginning to move to larger credit unions, and that's why we're seeing the reduction in numbers we're seeing. For others, they're coming together just to improve the service offerings generally, but every credit union has to take a look at their business model to make sure that it's appropriate. So I'm just going to walk through these various factors that I had on the previous slide. And the first one I'm going to look at are economics. I would say the biggest impact on credit unions from an economic perspective has been the low interest rate environment that we've been in over the last number of years and the low growth, economic growth environment that we've been in over that period of time. The Bank of Canada rate has dropped from 5.95% in 2001 down to 1.25% today. The Bank of Canada rate, if you think about it, drives prime rate, and the higher the prime rate, the greater the margin between deposits and loans financial institutions can offer, and that difference between what you pay out in deposits and what you bring in loans is really the income that credit unions have to operate on. And so the tighter that becomes, the more difficult it becomes to run your business. What we see when the interest rates are low is that profitability goes down. So in 2008, if we took a look at overall income as a percentage of assets, we would see that for the credit system in Manitoba as a whole, it was about 63 basis points. In 2015, that dropped to 46 basis points. Now, this is the income that credit unions have to operate under. It has come back a little bit. In 2017, we had a 75 basis point increase in interest rates over the last year or so, which has allowed the margins to go up somewhat, and they're at about 52 basis points in 2017. However, even though income is being reduced, the costs that we have to deal with are actually going up in areas like compliance and technology. I said that technology and regulation were two of the biggest factors in terms of issues and costs that credit unions need to deal with. The regulatory environment has been impacted the most by two substantive events. The first was 9/11, 2001, the terrorist attacks in New York. And the second was the financial crisis in 2008. So the outcome of the terrorist attacks was anti-money laundering and anti-terrorist financing legislation. And in essence, the purpose of that legislation was making sure that financial institutions know where their funds are coming from. Not laundered money, not money meant to fund terrorists. So the impact on the financial institutions with respect to that is a very big compliance regime that requires understanding members and where those funds are coming from and what the purpose of those funds are. Anti-money laundering legislation has led to the creation of an organization called FinTrack, and your credit union can talk about a lot of the work that needs to be done. This work does not generate additional income. It really is what's required to be operating as a financial institution. We figured out that just to comply with federal compliance regulations cost credit unions in 2017 $4.6 million, which is 4% of our overall net income. That's a big chunk of money. The impact of the financial crisis in 2008 was that all financial institutions had to increase their capital levels, their equity levels. So clearly in your financial reports today, you're going to see what your equity position is. And so in Manitoba, and an interesting point I'm going to make here is that in 2008, credit unions in Manitoba had substantial levels of liquidity. When that crisis hit, the banks quit lending. Credit unions had funds to lend, and we lent it out. We went over a 6-month period from 17% excess liquidity down to 12%, which means we had lending opportunities over deposit opportunities of 5% over that period of time. And credit unions lent that out. However, when regulatory rules change, they change for everybody. And so what happened is that all financial institutions have seen greater capital requirements. For credit unions, on a risk-weighted basis, and I'm not going to go into detail on that, where we had an 8% capital requirement based on the risk of our loans, that has gone up to 10.5%. And our regulator has said they would like to see all credit unions carry a buffer, which is moving it to 11.5%. So what that means is that we just need to take more of the money that we're earning for net income and keep it in reserve to meet equity requirements. And 3 weeks ago, our provincial government removed a special deduction that credit unions have enjoyed for over 40 years. And that removal of that deduction, it's going to be implemented over a 5-year period. When that is fully implemented, it is going to cost, in essence, the rate of tax for credit unions is going from 1% to 12%. And that increase is a 10% increase on net income. We make about $140 million a year as a system. That's an extra tax cost to us of $14 million. So, in spite of the fact that we have low margins and we have costs associated with it, we are going to be paying higher taxes, and that's also going to reduce the amount of funds that credit unions have to operate their businesses. I want to take a quick look at some research work that the Canadian Credit Union Association did. That's the National Trade Association for Credit Unions. They took a look at non-members and their level of knowledge of the credit union system. So in Manitoba, about 1 out of every 2 people are members of a credit union. And I got a slide that's following this to show that the level of satisfaction that members have with their credit unions. But frankly, we were surprised that that other 1 out of 2 had such a low level of understanding of what the credit union system offers. In essence, and it primarily in the 25 to 44-year-old 50-year-old group called the millennial group. But the comments were that banks were seen as more secure. They're not perfect, but more secure, likely because of size. And credit unions were seen as old-fashioned, small, not necessarily full service. So there's clearly a gap in knowledge with non-members that credit unions have to address if we hope to be able to grow our market and grow our market share. Now, what about our members? Members are very satisfied. Our credit union members have consistently been more satisfied with the services they get from credit unions than bank customers have been with banks. Both positive, but the credit union system, 91% say they're satisfied, 64% say they're very satisfied, compared to banks, 85% satisfied, and 48% say they're very satisfied. Despite this, 53% of members of credit unions in Canada actually consider a bank as their primary financial institution. Now that's different in Manitoba. 24% of people who belong to a credit union would consider the bank as their primary financial institution. But having said that, a third of the bank customers are generally disgruntled with the bank either because of fees or what they do with their profits. And yet what is interesting is that even though people are satisfied, 1 in 5 are prepared to switch. And many of these are the millennials who do a lot of searching for opportunity and are prepared to switch. So what's causing the desire to switch? Well, this was some research also done by the Canadian Credit Union Association. And the question was, what's the likelihood that you would be looking for a digital alternative to get your banking services? And the likelihood of that for credit union members over the 5-year period, 2012 to 2017, went from 22 to 48%. So more than doubled credit union members looking for a digital alternative. This is all working itself to what credit unions are going to need to be able to offer to be able to meet member needs. Accenture did a marketing consumer study in 2017, and it was entitled, How Can Banks Meet Customer Demands? And they broke down the customers into 3 groupings. And I'll quickly just walk through these. I'm going to start with this Nomads group. Nomads, which represented 39% of the banking respondents of this group, were a highly digital active group. They were ready for a new model of delivery. They wanted enhanced personalization, very willing to share their data, but their data had value to them. So they said, if you're going to get to look at my data, I expect to get service in return. Hunters. These are searching for the best deal on price. 17% of the respondents were hunters. They wanted human advice, not digital advice. They wanted to use traditional banks and traditional service providers. The last group here is quality seekers. They're looking for high quality, responsive service and data protection. So exactly the opposite to what the Nomads want. This was about 44% of the group that was researched, and they want financial service providers who will put their interests first. Loyalty is important, and so is confidence in the service provider. So, if you think about credit unions, right now we would do good, I would say very good work with the hunters and with the quality seekers, but lots of investment is occurring with financial institutions on how to provide service to the Nomads. So what's developing in the background around this whole digital service offering? So I'm going to move through this quickly. This is complex stuff. I understand it at a high level. I don't understand it all at the deep level because it is very complex. But in essence, these items are working together to be able to attract those customers that are looking for advice, quick service in a simplified fashion. Open banking. Open banking is legislated in Europe, is also legislated in the United Kingdom, and is being considered by our government. And open banking is, the definition is the development of standard interfaces that allow third parties, so financial technology companies, which they're called today, to plug into your credit union. If I, as a member/customer, give my financial institution the right to look at my data. Open banking legislation says the financial institution must provide access. And so a third party is going to come in, look at my data, evaluate it, and provide advice back to me. And all of a sudden, the relationship isn't with the credit union. It's with the provider of that service and the data. Blockchain. Now, blockchain is really the work that goes on behind the scenes. I'll read the definition, then I'll try to explain it. The mathematical model for processing, securing, and finalizing transaction. It's an incorruptible, which means unchangeable, digital ledger of transactions and identifications. And as transactions occur, the data keeps getting updated. And this is really the secure data that people are looking for through this technology. And also it allows multiple users to come in and evaluate the data at the same time. So now we've got people who have the right to access data, and now we've got a system in behind that provides for security of data. The next thing is artificial intelligence. Those are systems that learn, adapt, and respond autonomously, not with prescribed directions as to what to do, but go to it and analyze it. And so this is machine learning, and the machines look at the data, manipulate it, evaluate it, and provide advice back. So, we've all had experience with artificial intelligence through telephone customer service offerings. If you know Siri and Alexa, or you have a Google Home service, you use artificial intelligence. And you know that what's happening in that process is that those vehicles are constantly evaluating what you do, what you say, and they're determining your preferences so that they can provide service back and ultimately give you simple service that allows them to sell their products to you. And then the Internet of Things, what the Internet does is provides the ability for all of this artificial intelligence and information to be shared between different sectors. So we understand we're talking about financial services, but there's artificial intelligence just trying to figure out exactly where you want to eat, what you want to buy, all for the purpose of simplifying your life theoretically and buying their products. And that is really what is happening in the background. Here's some examples in the financial services industry. So these are applications that are providing services. Milo Investment and Found Savings rounds up your daily purchase to the nearest dollar and invests the change and opens up an investment account for you. And all of a sudden, you think you're buying, but you're actually investing. Mint, which has been around for a while, consolidates personal financial management, consolidates all your account from numerous FIs, and also does budgeting and analytics as well. Coho is a bank replacement using credit card technology and personal financial management. You can have your paycheck deposited directly to Coho, transfer money with e-transfers, pay your bills. Your Coho card works just like a debit card, except the payments are processed by a credit card provider. It's a prepaid credit card. And YNAB, which means you need a budget, is personal financial management, financial literacy coaching, lets you set up a budget based on your goals and helps you manage through that. These are all based on new technology and making it possible for members/customers to access their service in different ways. So how are the banks responding to this? Our primary competitors. They are partnering with all the companies that provide these services. They are not choosing to compete with them, they're choosing to bring them under the tent and compete with them. So RBC has an artificially intelligence-powered financial guidance savings program through a mobile app called Nomi. Nomi provides personal financial management. It also finds and saves, so it has investment and found savings using predictive technology, learns your transaction patterns, finds the extra dollars that it thinks you won't miss, and then sets them aside for you automatically. TD has a TD My Spend personal financial management, which does similar things, and labs. And you know what? Your credit union needs to be credited for the innovation lab that has just been set up, which I'm sure Larry's going to talk to. The banks are all setting up labs. CIBC Data Lab, Scotiabank's Digital Innovation Factory, RBC's Innovation Lab. How are the regulators responding? This is what's interesting, right? We usually talk about regulators in terms of it's a cost, it's a burden. I had a regulatory slide that I talked about all those things, costs and burdens. Although we do know that regulation creates trust, a framework of trust for the consumer if they know, in fact, things are regulated well. Regulators are encouraging and fostering innovation. They want to increase options for consumers. They want to bring Canada to the 21st century in payments. And they want to increase access to payments by non-financial institutions. The regulation is now moving to enable growth and innovation in the financial services sector, and also enabling the federal budget of 2018 talked about finding a way to make it simpler for banks to actually connect with these fintechs and offer this rounded service. So we're doing good today. You know, our market share provincially is the highest of any credit union system in Canada. We're just behind the Caisse Populaire movement in Quebec. But the real question for us is, what does it take to maintain that? So we know there's substantial investment underway in new technology by financial institutions. The banks, now we have to understand, banks are making $4 to $5 billion a year. That's facts. And so for them to invest $100 million in new technology and research is not all that difficult. And they are doing that. And they are looking to find that solution to how do we deal with those nomads, and how do we provide simple service that is convenient, easy to access, easy to use. That's what the consumer is looking for. And the thing is that simple service that's easy to access and easy to use, the machine behind that is anything but simple. It is complicated and it is costly. And that is the world that we are in, and that's the world that we need to succeed in. Just a couple of quotes to complete my presentation. Former CEO of General Electric. He said, if the rate of change on the outside exceeds the rate of change on the inside, the end is near. We know the rate of change is fast on the outside. We can see it, so we need to be able to respond to that. Michael Porter is one of the leading business strategists in the world. He teaches at Harvard Business School. He actually set up the consulting firm, the Monitor Group, which is now part of Deloitte's. And he said innovation is the central issue in economic prosperity. You know, when I look at this, I clearly recognize credit unions have actually been innovative for years. In spite of not having the investment dollars our competitors have had, we have been leaders in many areas in terms of the services that have been provided. But we need to be able to keep doing that. I said in a slide earlier, the stakes are higher, and we have to be able to respond to those stakes. And as I said, I think your credit union needs to be credited for the thinking that has gone into this innovation lab. Obviously, the real thing you want to be credited for is what comes out of this innovation lab and how it can lead to better service for you, the members, and for all those other people that don't know that they should belong to a credit union. So thanks very much. Thanks for the time today, and thank you.
Thanks, Garth. I've had a chance to hear a couple of Garth's presentations, and when he talks about the amount of change that is coming, it's hard to even kind of take it all in. And yet we know that it's coming, and we know that we're going to have to be able to react to it. We know that our membership is going to require it, and we trust that our staff is going to be able to put it all together. So it's great to hear Garth talk about it, and it's great to see our staff putting it in action. You know, when Garth talks about the Manitoba Credit Union system, it is by far the most competitive of any in the province. And he talked about margin at one point. I can remember getting into, when I started as a director, the margin was 1% higher than it is now. And people say, well, 1%, what's 1%? Well, on a credit union the size of Access, 1% is about $25 million a year in profit. And that's just the pressure that credit unions are on within the province of Manitoba when it comes to do with rate pressure. And as we're talking about pressure and profits, we're going to have Larry Davey come up and give the financial report for the year. It was a good year for Access, and Larry will share some of the details.
Thanks, Kurt, and thanks, Garth. It's great hearing your discussion. I'm going to talk a little bit about the financials today, but before I get to that, there's one thing I want to do. We've touched on it tonight. It was a very good year for your credit union, and one we're all very proud of. But it wouldn't happen without all of our staff and all the management group. So I would like if you could give them a round of applause for the great job they did this last year. I know as a member, everybody is concerned with the rate of change and what you have to deal with in change. It's nothing compared to what the employees have to deal with and the rate of change that we're putting through. It is significant, and my hat's off to them as far as how they've been dealing with it, because they've handled it just phenomenally. The other thing I wanted to touch on before I went further is Garth mentioned our innovation lab. And we just sort of opened the doors on it as far as a soft launch to get a sense of is everything in place for when we can have membership come in, and then we will announce to everybody and we'll have a grand opening. And we're very excited about it because the Innovation Lab is there for in my mind, for three reasons. One, it's there to help the credit union understand all of the processes we're going through and make sure any processes we change are running smoothly before we roll them out to all the other branches. We've been trying to roll them out to 17 branches and have discovered that isn't the best way of doing it. We feel we can run it through the Innovation Center and it will tell us if things are running correctly before we burden staff and our members with that. The second issue that we're looking at is it's there to help members deal with technology. It can be difficult for a member to go into a branch and sit down and have the time and learn about technology. We're looking at the Innovation Center as a training center for members so they become more comfortable with technology, which is going to make your life easier as far as doing your financial services. So those two issues are the main one. And then the last one is it'll give us a sense of what size a branch should be. We've now reached a point where almost 90% of the transactions in the credit union are handled electronically, and there isn't a face-to-face interaction. And we have to understand that what was needed in a branch before is likely not needed in a branch as far as capacity going forward. Membership is telling us that they want the technology. Once people utilize it, it's really different on how they deal with their banking going forward. Right now, we're probably seeing 3 to 5% more transactions every year as we continue to grow, but there's probably 10 to 12% less visits to a branch than there was the previous year. So we have to deal with that change in the environment. And that reduction in face-to-face transactions is increasing every year, even though our transactions continue to go up. So I'll move from that point onto our financial statement. So the first thing I want to talk about, there we go. Okay, so the first few numbers I want to talk about is Garth had talked about liquidity. And liquidity is basically the amount of money that we take in on deposit that we don't lend out. So if we look at the funds on hand and we look at the fourth category, investments, in 2015 we had about $210 million between those two. Last year we had about $280 million. That continues to grow and has reached about $294 million. There was a big jump the last 2 years because the regulation changed. We used to have 8% of our money set aside. The regulators now want 10. So that's why there's been the jump. You can see that our loans have jumped from $1.8 billion over the last 2 years to $2.12 billion. So pretty close to $300 million in the last 2 years. Last year was very strong, and that was helped along a little bit because we had a number of people shifting to us, locking in mortgages and loans with rates changing. We have fixed assets, intangible assets, investment property. The amount there is the building that we own that's right next door to corporate office, which is the BDO building. BDO rents from us. So that is an asset to us. And then we have investments in associates. We're part owner in some insurance subsidiaries. And one of the subsidiaries we sold last year. We had a subsidiary in Carmen that we owned. We ended up selling that off. So overall, you can see that our total assets have grown almost 400 million in the last 2 years, which has been very strong growth and a little stronger than the system has enjoyed over the last couple of years. When we look at the other side, one of the first categories here you'll see that's increased over the last 2 years is securitized borrowing. This is a program offered by the federal government that allows us to bundle up residential mortgages and sell it as a bond through CMHC, and someone will continue to pay us for that. We maintain the loans, but we pay an interest rate on that. There is the member deposits, and you can see the member deposits have jumped up this past year about $140 million. There was a strong demand on the deposit side. Our member shares, 2 years prior, we had about $4.7 million in that, but we returned $4.5 million to the members. One of the criteria of coming together that the board wanted to make sure was looked after was there were patronage shares that were owned by the members of the various credit unions, and we paid them out in cash over a 4-year period. So 2015 was the last year we paid those out. And then the last 2 years, the shares are simply the $5 share that you own. When we move down to our retained earnings, Garth had talked about equity, and that's the equity in our credit union. And you can see right now it's about $160 million, or about 6.56%, which is very strong for retained earnings in the Manitoba system. I believe the average is about 5.7 or 5.75 for retained earnings. So we're doing very well on that side. So total liabilities and equities to balance off with the assets is $2.4 billion. Growth continues. We've seen strong growth again starting this year. It's something that is definitely required as far as maintaining the sustainability of your credit union. So we're very, very pleased, and the staff continue to do a strong job on that. Are there any questions on the balance sheet? Any concerns? Any thoughts? There was none. That's good. Okay, so on the income statement this past year, Garth talked about all the different aspects of expenses and regulation and all that, and we'll get into it a little bit. The first one he talked about was the financial margin. So you can see our revenue this past year was $74 million, which is up about $5 million from last year. And that was helped by the changes in interest rates. We saw 3.25% jump up by the Bank of Canada, so that helped our revenue. On the other side, it also increased the cost of deposits. So our deposits cost us almost $3 million more year over year. You can see there was a big change from 2015. And part of that was we introduced the new Platinum Savings Rate 2 years ago, providing members with monies up front in the form of a high savings rate. There was a great uptake by the membership, and so that cost rose, and our overall gross financial margin, you can see 2 years ago, was 1.73%, and it's down 20 basis points to 1.53. That's part of the competition in Manitoba. It's part of our philosophy to pay funds up front to the membership in really strong savings rates and or term rates. It was also a case of us lowering our mortgage rates 0.25% a couple of years ago. So that meant the financial margin dropped. In order to remain sustainable, remain strong, we had to make sure we were bringing our costs down. So you can see 2 years ago, under gross operating expenses, we were about 1.44%. Now we're about 1.31%. So we've been able to keep all of those costs under control. So our other income, which comes from service fees, comes from the money generated on our subsidiaries from insurance, has remained pretty well the same at around 0.44%, 0.43%. At the end of the day, this year, our gross income was almost $16 million, which represented a very, very strong year. So after you have your gross income, you have to set aside any monies for loans that have decided not to pay you back. Then you have income tax. As Garth mentioned, our income tax this year, we paid $2.8 million. The majority of that, if not all, goes to the federal government. The provincial government is eliminating the tax credit that they were giving the credit unions in Manitoba, so that amount is going to jump up by about 50% starting, and it happens over a 5-year period, but starting next year. So it'll go up by 2% next year, and then by the end of 5 years, it'll be 12%. Sorry, 2.5% next year. At the end of the day, instead of paying $2.8 million in tax, we'll end up paying about $4.3 million in tax. So a substantial change to us as far as funds available to go to equity, funds available to spend. One of the things I did want to touch on, when we look under our expenses, one of the expenses we have is administration, and in there is technology. If I'm correct, am I, Ruben? Yes. Is technology. The amount we spend on technology has jumped in the last 5 years by about $1.5 million. Okay, that's how much it's jumped. That will continue to trend, so we can count on spending 5 years from now about $2.5 million or $2.2 million more on technology than we're spending right now. When you take the $2.2 million, you take the $1.5 million in tax, it's a substantial change to the income. Okay? It's something we have to be aware of, and it's something we'll continue to plan for. So our net income was about $13 million. Overall, it was a very, very strong year. I'm happy to take any questions on the income statement that anybody may have. Nothing, Doug? You prepared it. Okay, so there was one other item I wanted to touch on because it does come up every year. I know for the staff at the branches, they get a lot of questions because most credit unions are doing their year ends right about now, and they're doing their AGMs, and we get a lot of exciting announcements. So I think 3 weeks ago, Steinbach announced they were giving back $7.5 million to the members. Crosstown Credit Union announced they were giving back $3.2 million to the members, and that all sounds really exciting. 3 or 4 years ago, when we met with the board in a planning session, the board was very clear in that they said, you know, we want to give the members money up front rather than them having to wait and see how much they might get at the end of the year. But we still wanted to let you know you're getting a really good deal. So if we looked at the savings account we have, the Platinum Savings, we have 3 tiers on the Platinum Savings. If you looked at Steinbach on the first tier, they pay 2.15, Crosstown pays 2, Access pays 2.3. We figured in the patronage refund and how much that adds. And in the first tier, Steinbach, if you dealt with them all year, you'd get 2.26. Crosstown, you'd get 2.07. And with Access, you get 2.3. Which is a small benefit, but still a benefit to each member. If you expand on the tiers, the benefit continues to grow. We just wanted to let you know this was just a decision made that rather than waiting, we want to make sure the members have the money in their pocket and they have it sooner than later. Is there any questions on this? So we won't be doing a big announcement, but you can rest assured your benefit. That's it for the financial statements. Thanks very much.
Thanks, Larry. We now need a motion to move and approve the financial statements for 2017. Carrie, you got it in the back. Mover, John, Melvin, a seconder, Alvin, Elias. All in favor? Opposed? It's carried. Also like to move and appoint that we appoint BDO Canada as the auditors for Access Credit Union for 2018. Can I get a mover and a seconder for that as well? Hank Hildebrand, seconder. Ben Duick, all in favor? Opposed? That is carried. And if Garth's presentation earlier didn't scare you enough about what the future is bringing, we had a video that we saw at our planning session a couple of weeks ago, and we thought we should show it to the membership as well so that they can kind of see what's coming down the road here. So we'll see if technology will allow that to happen. So you can see how things are changing and how items that a couple of years ago we might have thought, well, that's kind of futuristic and all these predictions that they're talking about, they are happening. And they are happening at a faster pace than I think any of us realizes. And we as a credit union have to stay on top of these changes. And we're going to have to spend the money, we're going to have to make some tough decisions, and we're going to have to be innovative and willing to take some risks. I want to start the board report by thanking not only the staff, as Larry has done, but our management team, and especially you, the membership, for making Access Credit Union one of the most successful credit unions in the province. We had a very good 2017, and when we look at our growth numbers and our profit numbers compared to many of the other credit unions, we are at or near the top. Garth mentioned the change in the credit union landscape and how when he started in the credit union system, there were 67 credit unions. Today there's 27, and I'm sure next year at this time we'll be talking, there'll be fewer than that. It's been predicted that within the next 4 to 5 years, Manitoba could conceivably be down to 3 to 6 credit unions. As we've seen with the technology presentation, these things are happening. And it's not a, well, maybe that will happen. It will happen. And it's just a matter of who and when and how. As a board and as a senior management team, we have to be aware of these changes. We know that status quo is not an option. If the future looks to be 3 to 6 credit unions, and we as Access don't do anything, we could conceivably be the smallest credit union in the province once all this is done. We talked about technology costs, and when you see all these presentations, it is not cheap. Our technology costs just in the last 5 years have gone up $1 million a year. $1.5 million. It got even more expensive just in the last couple of days. And these are costs just to be in the game. These are not costs to be a leader in the game. Last year in my report, I mentioned how the top 10 credit unions in Canada had each pooled $1 million to look at future technology. And between these credit unions, they had a $10 million pool. Scotiabank was spending $100 million just on their own. So for the credit union to be competitive, it has to be nimble, it has to be agile, and we have to have great leadership. And fortunately for you, the membership, and we, the board, we have that with our staff here at Access. We also talked about the increased requirements for regulatory, that buffer zone that we have to have. Well, when we talk about 10% of our equity, last year Access grew $180 million. So if you figure 10% of that, that's $18 million that has to go into that buffer to protect in case there are any troubles down the horizon. So when people talk, and Larry did talk a bit about patronage, you can see, well, 10% has to go, that's a direct requirement to go into equity savings. So that's where that profit is going. When people say, well, what are you doing with the profit? Well, it's going just to maintain our equity levels at the requirements that they're at. Garth touched on a slide that says people are going to require digital technology at twice the rate that they are now. People are going to want easy access, and they're going to want easy use. And this is going to require a lot of work and a lot of trust by you, the membership, in the staff. We talked that 90% of the transactions are already electronic, and we know that number is just continuing to rise. And that is going to change what the branch of the future looks like. The Innovation Center is going to be working with technology that will allow people to actually come in and just do everything video. You'll be able to, at some point in the not too distant future, to probably get a loan on your iPad. You won't have to go in and see a loans officer. Everything will be done digitally and electronically. And I shouldn't even say iPad, it'll probably be phone at some point. So this change is happening. I talked to people at a bank in Buffalo not that long ago, and they had, it took them 90 seconds for somebody to get a car loan on their phone. And that's just part of what's going to be required. And I also wanted to touch on, the previous video talked about banking, and fortunately we can use that word. About a year ago there was a lot of concern about what would happen with the word bank or banking, and the federal government has come to some common sense and said, it's just a word. So that word, which credit unions were concerned that we would not be able to use, is no longer an issue, and it is something that we can use going forward. So when we talk about what the future of the branch looks like, we know it'll be different than today. We know there will be fewer branches than we have today. Technology is allowing people to do everything from either their home or their person. I've got two sons who, they just don't go into the branch. And when I look at their phone and I see how many of their transactions, everything's done digitally. And they say, well, why would I want to go into a branch? I can do everything right here. So we know the future will look different. What it will look like, we don't know. But we want to let everybody know that the change is coming. And it will happen at a faster pace than we're used to. And Larry just touched also on the decision that the board made a number of years ago to pay members up front with competitive rates. What he didn't say is we have some of the most competitive interest rates in Canada that we offer on our savings. The platinum savings that we put out to membership when we started that account, it probably pays out anywhere from $3 to $4 million to the members up front as opposed to the average savings rate of the other top 5 credit unions in the province. So that is money that members are getting up front, that they're getting to use, and that they're not having to wait for the end of the year to see what will happen. So it's been a good year. There's been lots of change, and we know that there will continue to be change at an even faster pace than we've seen. What it will look like, we don't know, but we have faith in our staff and in our leadership team that they will guide the credit union through it. So I want to thank you, the membership, for your support, for your continued business in supporting your credit union, a credit union that we feel makes not only our membership's lives better, it makes our communities better, and it makes the entire Southern Manitoba region better. So thank you to each and every one of you for your continued support. We need a motion to approve the board report and to ratify the actions of the board for the fiscal year ending December 31st, 2017. So hopefully I can get somebody to move and to second that. Got it, Carrie? Jake Jansen? Seconder? Hank Hildebrand. Good. I was thinking it was going to be rough if we couldn't get that. All happening in hindsight. And we need to vote on that. All in favor? Opposed? That is carried. I'd like to now announce the results of our director elections. In the Central region, we had Jim Neufeld, who was acclaimed. In the West region, we had Scott Beattie, who was elected. In the East region, we had Carla Unger, who was elected. And in the member at large, we had Cheryl Duig, who was acclaimed. I'd like to also get a motion to destroy the election results, which are not actually paper ballots anymore, but there are some files somewhere in some system. So could we get a mover and a seconder to destroy that? Got it? All in favor? Opposed? That is carried. At this time, I'd like to call up Phil Unruh and Sandra Dell, two directors whose time on the board has ended, and I want to thank them on behalf of the board and the membership. Phil has served previously on the Dufferin board. He was one of the key contributors in Access coming together. He has served on the board since its inception, and I've always appreciated the perspective that Phil brings to the conversation. Sandra has served for the past 6 years on the Access board, which is probably about 3 years longer than she normally serves anything, so it's been good to have her along. Sandra also does a great job of bringing perspective. She is strong in the field of governance and really keeps us on our toes for making sure that we are doing everything the proper and correct way. So on behalf of the board and membership, I want to thank both you, Phil and Sandra, for your time. Thank you. It's heavy. So now I would like to introduce your board. So going forward, I ask each of the directors to stand when I call your name, and we'll remain standing until everybody has been announced. Scott Beattie, David Bickert, Ben Duig, Cheryl Duig, Alvin Elias, Jake Jansen, Ray Kirk, Jim Neufeld, Carla Unger, Sherry Wood, and myself, Kurt Letkeman. All right, so I want to thank you for attending this evening. We want to invite you to stick around for some refreshments. And again, thank you for your support of your credit union. It's you, the membership, that makes this organization function the way it does. So thank you, and look forward to a successful 2018.